So imagine that you're in a room with some of the world's greatest traders. Think Jesse Livermore, George Soros, Warren Buffett. One of the things that they'll all have in common is that each of them have their own unique style of trading. But what if there is one strategy that even the greats could agree on that guarantees simplicity and gives you a real unique edge to the market, even to the newest of traders, literally from day one? Because with so much in the world of trading to learn, it would seem like it would have to be as simple as a buy and sell indicator, right? Well, in this video, I'm gonna show you the fastest way to improve your trading. We're gonna cover live trading examples, and I'm gonna demonstrate how simple it can actually be. But before we dive in, let's explore what might be holding you back from taking a major leap forward, especially if you're a more advanced trader or if you've been trying to figure out how to get profitable for a while. You see, beginner traders actually have a slight advantage over seasoned traders who've been struggling with consistency. And this particular advantage or an edge is only clear in hindsight, meaning you only recognize it after you become profitable. I've been trading for 7 years and have been consistently profitable for the last 3. So I'll show you proof that what I'm about to tell you is fact. So imagine that euphoric feeling when you first meet someone new, those butterflies in your stomach, those moments of pure excitement without any judgment. Now contrast that with being 60 years old, single, trying to find a match. You feel like time is running out, and pretty much every person you meet carries their own set of baggage. So new traders actually have an advantage of having zero baggage. However, the disadvantage is that there's an overwhelming amount of information out there. So if chosen poorly, you might find yourself like the single 60-year-old who feels like time is running out, because trading can significantly tax your mental clarity and capacity. So as we dive in, I want you to release your baggage, forget about what you've been through and what you think you know about trading, and just take in what I'm about to show you. Now, in order to be profitable, the first and most important concept that you need to understand is how the big money players place their trades. These are who we call the market makers. You see, these guys have huge bags and they can't just get in the market like a retail trader all at once. They actually have to wait until the liquidity is at its highest. So to explain this, let's take a listen to what I said this morning on our live trading call before the market actually opened.
If you're a market maker, you want to get your orders in, right? So what do? You got to push the market down. I would try to get all this right here and try to even like down here, push it underneath the stops and then let it keep going and then start buying puts, like all in this area.
Okay, so you heard me talk about how the market makers will push price to manipulate, which hits stops, which opens up liquidity so that they can get their big orders filled, and price reverses going in the intended direction. All right, so this is real-time price action. You can see that idea panned out. The stops were taken. So market makers drove price down to fill institutional orders after opening up liquidity from grabbing all these stops that were underneath for longs. And once it did that, it had no problem breaking structure and going in its intended direction. So look, thinking in this way alone, like a market maker, if you were just thinking like a market maker, that's not going to make you profitable by itself, right? You have to wait for the right setups, and you have to do it based on a strategy that you can repeat over and over and over again. And that's what I'm going to go over right now. But before I go over that, I want you to know that this took me 7 years, over 10,000 hours, blood, sweat, tears, time away from my family, and so much more. And I am literally giving you no fat. Do you understand? I'm not giving you all the stuff that you think you need to know. That's why I said leave your baggage at the door. I'm giving you what you need to know. So if you want to really master this, you need to leave all that other stuff at the door. It doesn't work, okay? So with that being said, if you find value in this video, don't forget to smash the like button, tick the notification bell, subscribe to the channel. I'd love to have you, and come visit me in the community. All right, back to the video. So the actual trade itself is very easy to understand. You just want to be looking for liquidity to be grabbed. In this context, you have liquidity at the top that was grabbed. Now we're down here on a 3-minute time frame. I'm even going to go to a 1 minute so that you can see just how fast things actually play out, right? We grab this liquidity and you can see this imbalance on this 1 minute candle right here, right? And if you don't know what an imbalance is, or a fair value gap, all it is the space between the left and right side of a candle that was not filled. Here you can see this bottom of this wick stops there, top of this wick down here stops there. So the in between is the fair value gap, essentially an inefficiency in price. So price comes down to fill the fair value gap, and we leave this news wick from the top. So what I'm looking for is I'm looking for price to take out lows, because if I'm going to buy, I want to be buying at a discount, right? So let's play price out a little bit here on this 1 minute and just see what happens on a 1 minute, okay? So we take out lows right here. This is where sell side liquidity was taken. So what I'm looking for on this 1 minute time frame are fair value gaps that get inverted. Here we have a fair value gap here that gets inverted right here. And my first long today was actually right here. I'll show you the setup. It was right here. This was my first long of the day. And what happened was price came back down, and you'll see we closed this 1 minute candle disrespecting this inversion to the upside, right? So if this was going to play out, I would have seen something like price just bouncing right off of this and moving up, but it didn't. So I ended up closing this out right here and waiting for my next setup. And you can see we create another fair value gap right here. Well, price barely closes over it, and it closes it without a bottom wick. So see this wick right here has not been formed on the bottom of this candle. When they don't have a bottom or top wick, it's highly likely that price moves and fills that wick. And that's exactly what this next candle did. So I did not take that trade because of that. As soon as the market opens, we create lower lows. We take out all those stops below us, creating a little bit more gappage. So market plays out a little bit more, creates another fair value gap, and this was inverted by one candle. We call that a balance price range, as a BPR. And these are much stronger places that price usually will respect. So, you know, I took a trade going off of the notion that we may not even come back and test this, because the market was looking really nice, really juicy, really bullish. So because of this bullish price action, I wanted to see if there was any inefficiency on a 3 minute. That's sort of then my next go-to time frame. And I saw it. I said, oh, wow, there's a 3 minute right here, right? So then we're going to mark this out. And I said, you know what? I feel comfortable go ahead and taking a trade right at this 3 minutes. So this is actually where we got in. This is the trade setup. Now, buy side liquidity was my first target. Where is buy side? Well, I knew that this was a news wick. Most likely those are going to get filled. So that's kind of like my ultimate target. My first target to manage this trade is at a 1-to-1. My 1-to-1 is really close to my first buy side, which is right here. And so basically the top of this wick here. And so I'm waiting for price to take off and go higher. Now, where am I basically taking this to? Well, my ultimate TP level was the top of this news wick, but I also knew that we had a good chance of breaking higher. And if that happens, I can just close, 70, 80% of this trade and let it run. So what ended up happening in this trade is that I took this trade based on an inverted fair value gap. These are some of the strongest plays in trading, especially if you use the checklist. By the way, the checklist is free. Download it. Link is in the description. What are you doing? Click on it already. So yeah, this was a great little setup and a great trade. And we obviously took this to the bank. It took out that buy side liquidity and then kept running. Really nice trade today. I'm very happy with this. Let's go to another trade. Okay, so same thing with this trade. All we did was mark our high time frame liquidity targets over here. If you have the checklist, you would know this. We waited for that to get tapped. And all we do is we're going to mark our fair value gaps. That's it. We're just going to mark where we see inefficiencies in price. Okay. And here you can see that the market turns, it breaks structure up here. So we're good to go as far as structure. That is one of the things on the checklist to look for. After you break structure, we want to look for inefficiencies that might be able to get filled. Here you see a fair value gap right here. And we inverted this fair value gap. So technical entries, well, you could go in here, but you're going to have a stop that is a little deeper than preferred. So what we did was we moved up into this fair value gap because structure was broken. We can do that. And we put our stops up above the swing, and we targeted the sell side liquidity. And then, obviously ultimate sell side liquidity was down here. So this was the ultimate target that gives us a 2-to-1. So that panned out, price came right back, entered us into the market, and ended up pushing down. And honestly, for the whole day, look at this. I mean, this was a great trade. Here's another trade from yesterday that panned out. You can see the R factor was out of control, 13R. That means you risk 1% to make 13% on your account. So let's cover this trade real quick. So this is the trade idea, same thing. We grab high time frame liquidity at the top. We break structure to the downside. It's on a higher time frame now. So now we're playing structure. We're playing into the idea that the bias for the day is going to be down. So if the bias for the day is down, where should price stop on a pullback? Well, most likely price will stop at breaker blocks if they are formed. So this is a 15-minute breaker. Price halts right there. We ended up getting in on this particular inversion. Let me go down to a 1 minute and show you exactly where we're looking. So this to us is played the same way as a high time frame liquidity area. And as you can see, price ends up reversing and inversing on this 1 minute right here. So in fact, this might have been a little bit lower. The actual entry was right here. So that was the trade. We treat the breakers as high time frame. It's the same that we trade high time frame liquidity zones. We wait for them to get tapped. We look for an inversion on a lower time frame and we take the inversion. Now, the one thing I mentioned at the start of this video was how easy this strategy is. It's like having a buy and sell indicator. It's so easy, in fact, that beginner traders are absolutely crushing it. Well, guess what? The trades that you just saw were executed by beginners. And what makes this strategy straightforward is that people like myself and my partner Troy have literally refined this thing down to a science, and we're not just trading it live, we're actually demonstrating it to anyone who wants to elevate their trading game, and we're showing them exactly how it's done from start to finish. We're transparent about where we enter, how we manage the trade, where we exit, and because of this clarity, even brand new traders are finding success. So the fastest way to level up your trading is by getting a mentor. Prices for premium access are about to increase in our community, so click the link in the description if you want to find out more. And listen, having this checklist, it is crucial, but it is completely useless unless you understand the 3 types of liquidity that market makers love to exploit. So to fully grasp those concepts, make sure that you watch the video I just released that explains the 3 liquidity types and how to identify them.